Hope everyone's having a great day. This is Jay from J&D's Retirement Journey. Please hit that subscribe button. We're trying to get to 100 subscribers by the end of the year. It'll really help out the channel. And again, it's totally free. And don't forget to hit that thumbs up button and the bell notification. Thanks again for watching the video. What's best, a regular S&P index fund or high dividend EFTs? Let's take a look and see what we come up with. I am comparing 4 high dividend EFTs to the Schwab S&P 500 index fund. Let's start off with the famous SCHD. This fund seeks to track as closely as possible before fees and expenses the total return of the Dow Jones Dividend 100 Index. We shoot over to the Schwab International Dividend Equity EFT. This investment seeks to track as closely as possible the total return of the Dow Jones International Dividend 100 Index. We're going to shoot over to VYM, Vanguard High Dividend Yield Index. This investment seeks to track the performance of the FTSE High Dividend Yield Index that measures the total return of common stocks of companies that are characterized by high dividend yield. Now we're going over to the Vanguard Dividend Appreciation Index, VIG. This investment tracks the performance of the S&P U.S. Dividend Growers Index that measures investment return of common stocks of companies that have a record of increasing dividends over time. Now, last but not least, the S&P 500 Index Fund, the Schwab Swppx. This investment seeks to track the total return of the S&P 500 index. Let's take a quick look at the fees and expenses. SCHD 0.06, SCHY 0.14. That seems to be the highest of the whole group. VYM 0.06%, VIG 0.06, and the winner, the cheapest expense ratio here is 0.02 for the Schwab S&P Index Fund. Now let's take a look at the quotes. This is as of Thursday, 7/20/2023. 74.80 for the SCHD. SCHY is at 24.56. VYM is at 109.23. VIG is at 165.29. And SWPPX is at 70.49. Now the yield here, SCHD is quarterly at 3.58. SCHY is semi-annually at 3.67. We go to VYM is quarterly at 3.14. Quarterly for VIG at 191. And annually at 1.43. for the S&P 500 fund, SWPPX. The risk and returns here. Let's take a quick look at these EFTs. A beta of 1 indicates that a stock's volatility is in line with the overall market. A beta of less than 1 is generally considered less risky than the market. And a beta of greater than 1 is considered more risky than the market. So these EFTs, starting with SCHD, has a 3-year beta of 0.81. VYM has a 3-year beta of 0.78. VIG has a 3-year beta of 0.86. And the S&P 500 fund has a beta of 1. Initial minimums for these EFTs. Basically, no minimums. Basic IRA or custodial, you could get in and there's no minimums, or you got to buy $1 in the S&P 500 fund. All right, Morningstar rates these funds basically 5s and 4s across the board. SCHD historic return is high, historic risk is below. They don't have anything here for SCHY. VYM, above average returns, below average risk. VIG, average returns, low risk. Above average returns for the S&P 500, and the risk is average. All this information is right off the Charles Schwab website. Guys, do your research. Talk with a financial planner. I am not a financial planner before you decide to invest in any type of security. We're going to shoot into the growth of $10,000. We're going to compare all the funds here. It looks like the S&P 500 fund is basically doing the best out of the lot. You could go down the list here, and on the bottom, it looks like it's SCHD. This is for 10 years. Let's go over to the 5-year chart. Looks like the S&P 500 fund is still on top here. We go over to the 3-year chart. Same deal, S&P 500. The 1-year chart, same deal, S&P 500. So it looks like the S&P 500 is basically winning right down the line. Let's take a quick look and see what these funds hold. SCHD, total net assets, 47 billion, 104 holdings. They're basically all stocks. SCHY, 740 million. Looks like it's the smallest fund out of all of them. All stocks. They have 130 holdings. VYM, 60 billion, 465 holdings. And all stock. VIG, 82 billion, 317 holdings, all stock. And the S&P 500 fund, 72 billion, 505. They have the most holdings and all stocks. As we shoot over to the top 10 holdings of each fund, I'll let you guys basically look through all this. But SCHD, they have 40% in their top holdings. SCHY has about the same. VYM, 25% of the top 10 holdings. VIG, 31%. And the S&P 500 fund has 30%. Now, let's take a quick look and see the weightings. Basically, you can see the breakdown. You know, you guys could look at all this and see what sectors are heavier. It looks like across the board, it's like financials are heavy and IT. Basically, those are the two top sectors, and you got some healthcare too. That's pretty large chunk of these funds. As we go into the market cap, SCHD, you can see the breakdown between giant, large, right across the board here. See the regional exposure. Basically, most of them are in North America, except, of course, the international fund, which is broken down across the board here. And that'll do it for the breakdown of these funds. All these funds are great, but it really depends on your personal situation, what fund is right for you, or if a few of these funds are right for you. So you really have to speak with a financial planner. I would suggest a no-fee financial planner. For me, basically, and my wife, we own the Schwab High Dividend EFT, and we also own the S&P 500 fund. I'm thinking about buying some of the international fund just for the diversity. You know, my goal was to get to 1,000 shares of the SCHD. I have about 400 right now, but you know, it looks like I might invest more in S&P 500 funds. You know, I'm getting close to retirement, so we're basically trying to get dividends. We wanna achieve that and get $20,000 in dividends a year when we retire. We're about more than 3/4 of the way close to it. We're over 14,000. So it all depends on your personal situation. If you're young, I would say go with the S&P 500 fund. That's what I'm doing with my daughter. And I also have her in the high dividend fund. But I'm going to invest maybe like 75% in S&P 500 funds because, she wants growth. She doesn't really need the income right now. So you guys decided what's best for you, and good luck. Hope this video was informative.